What's up, everybody? Dave P here with the cream, and today we are talking about BRRRR deals. And the last, well, not really the last. Let's talk about what a BRRRR deal is first off. That is where we buy a property, renovate a property, rent a property, refinance a property. That's the big R that we're talking about on this particular video. And I think some people throw an additional R at the end and say repeat. The BRRRR deal: buy, renovate, rent, refinance, repeat. Well, I'm here to let you know the probably, arguably, well, definitely the most lucrative part of this transaction is the refinance. And I'm in the process of currently refinancing 17 properties today, and I'm gathering information here for the lender and what they're requesting to get this refinance started. So I thought it'd be a good day to talk about what do we need to do to get these deals going, with these refinances going. The reason the refinance is so lucrative for us as real estate investors is simply because that's where we do the cash out on the refinance. And what's cool about the cash out on a refinance with a BRRRR deal is the money that you cash out and that you put into your bank is tax-free money. The reason it's tax-free is because it is a loan, right? It's not income, it is a loan. You are borrowing from a bank for this refinance, and any money that is above what you are paying off, for instance, you buy a property with private money. Just for simple numbers, let's pretend you bought a property for, 100,000. You rehabbed it, bought it and rehabbed it for 100,000. Let's say it's worth 150, and after it's fixed up, the bank is willing to lend you, let's say, 125. So when you refinance this property, the bank comes in with 125. Your 100,000 that you borrowed from a private lender to purchase and rehab the property, that gets paid back. There's $25,000 extra there, and that money goes to you. And that money is tax-free. That is a cash out refinance. And that is the play here, everybody. We're going to get into the documents needed. I got a bunch of stuff here for you. I put some stuff in the description as well. And talking about this refinance that I'm initiating today. But let me just kind of go through the step-by-step here real quick on how this real estate thing works, really, in general. So first and foremost, it all starts with lead generation. We need to be targeting motivated sellers, bringing in leads. With these leads, we need to monetize these leads. And the way we're going to monetize these is really three main categories. Number one is wholesaling. Number two is fix and flips. And then number three is to buy and hold these properties, in which then we're probably going to do a BRRRR on these deals. Those are the big three right there. There's ancillary ways to make money with the leads that you're generating. One of them being maybe refer these leads out to a realtor who's going to list them as a novation, or I'm sorry, list them as a retail property. You can do a novation. We do a lot of novations, and we call it, the PEP program, Protect Your Equity program, and we got a whole way to make money off those leads as well. That's really, I should add that into the big ones. The main way to monetize your deals in leads is number one, wholesale, number two, fix and flip, number three, novations, and number four, the BRRRR strategy, right? And wholesaling is great when you're first getting started, simply because you don't need any private capital. You don't need to use any money to take title to the property or rehab the property when you're just straight up wholesaling. That's why a lot of people like to start with wholesaling. And I talked to one of our students today, and she was asking me, what should I do, buy and hold or wholesale? I said, both. You always need to be doing both. You need to keep the money coming in and keep the lights on from wholesaling and quick flip deals. Novation deals, I would consider a quick flip deal as well, while you're setting up your portfolio for refinancing and doing the BRRRR strategy. So yeah, we own a number of rentals, probably upwards of 100 properties right now. We're always buying and selling and doing different things, but we probably got 100 rentals. But while we've been building the rental portfolio, we're always wholesaling. Why? Like I just mentioned, you got to keep the lights on. So wholesaling is a great place to start. And you should always be wholesaling properties just to keep the lights on. But then also you want to be able to get out there and raise private money, and raise that private money so you can buy properties, take title to properties, and then fix these properties up and get them ready to refinance. And when you refinance these properties, that is when you're going to pull some cash out and keep it as a buy and hold, right? That's where when you refinance these deals, that's when you are going to get a 30-year mortgage, long-term debt, and a much lower interest rate than your private money. We're borrowing private money anywhere between 10 and 12%. And the refinance that I'm just getting ready to initiate here today is 7.38%. Some people are complaining. They're saying, oh, the interest rates went up. Oh, they messed up all our BRRRR deals. I'd rather pay 7.38% than 12%. I'm still doing them. Sure, 2 years ago, we were getting rates in the fives. We have numerous 30-year loans against properties in the fives. But rates go up. What does that mean? We stop our business? We stop being real estate investors? The answer is no. You have to keep moving forward. So today I'm initiating several BRRRR deals. I have 17 properties, working with a lender. This is kind of the way you shop for a lender. A lender is going to charge you, the things you got to be aware of when you're interviewing a lender or considering borrowing money is, number one, what is the origination fee? Typically, you're going to pay anywhere between 1 point and 2 points. 1 point is equal to 1% of the loan. So if you are borrowing, $100,000 on a loan, 1 point would be $1,000 or 1% of the borrowed amount. Sometimes some lenders are charging, like I mentioned, between 1 and 2 points. Anything over 2 points, you're probably paying too much. 1 point is what I'm paying on this particular origination, on this particular refinance that I'm working on. Another thing that you're going to want to ask your lender is what LTV, what loan to value are they going to lend at? The higher the LTV, the better for you. It just means that they're willing to finance more, and you can probably, pull out more money. So loan to value, most banks are going to be around 75%. Some banks are a little bit more conservative right now, and they've dropped down to 70%. Some banks you can find who are doing 80%, but 75% is typically where you're going to be at. And the refinance that I'm initiating today is at 75%. Another thing you're going to want to look at when you're looking at a lender and looking at a refinance is what is called DSCR. Now, this can be a little bit confusing, but it's very important. DSCR stands for Debt Service Coverage Ratio. And that means essentially how much of the rent is going towards the mortgage payment. Now, this is interesting. So a lot of lenders have a minimum DSCR requirement of typically around like 1.2%. That means if your mortgage payment is $1,000 per month, your property needs to be rented for at least $1,200 per month, or whatever your mortgage payment is times 1.2%. So, essentially that's just the way it works. The bank wants to see that the rent is more than enough to cover what your mortgage payment is. The lower the DSCR amount, the debt service coverage ratio, essentially the less conservative the bank is. The bank that I'm working with right now is 1.1%. So if my mortgage payment is $1,000 per month, they only want to see $1,100 per month in rent. It's pretty conservative, right? A lot of banks want to see 1.2% or $1,200 per month on $1,000 mortgage payment. If that makes any sense. So you want to ask what the LTV is, what the DSCR amount is, what origination fees you're going to have to pay, prepayment penalties, everybody. This is a big one as well. Prepayment penalty sounds pretty self-explanatory. It is pretty self-explanatory. And that is if you pay this note off, if you go to refinance or sell these properties, what is that going to look like? Do you have to pay a fee? And a lot of lenders have like a 5-year prepayment penalty. Essentially, it's like the first year of the 5 years, it's 5% prepayment penalty. Second year 2 is 4%. It steps down. Year 3 is 3%. Year 4 is 2%. Year 5 is 1% prepayment penalty. After 5 years, no prepayment penalty. That's pretty typical. 5, 4, 3, 2, 1 is what they call that. So this is what you want to consider when you are getting ready to do a refinance. What did we talk about? Talked about the loan to value. We talked about the origination fees. We talked about the DSCR. We talked about prepayment penalties. This is all very important. Now, what do you need to gather for this appraisal? I'm sorry, for this refinance to take place. Number one is the appraisal. You're going to have to pay for the appraisal up front. You're going to pay anywhere around, $200 to $500 per appraisal. It's pretty. In fact, I just got a text from the lender. She had mentioned she's just a broker. A broker is just somebody who goes out and finds the money for you, and they earn a fee. And she just informed me here. Well, $4,500 total. She said you're saving $200 to $250 per file. So $4,500. I need to pay a lump sum of, and I think that's against 17 properties. So if I take 4,500 divided by, I think it's 17. Yeah, $264 an appraisal. What did I just say? Between 2 and 400, 500. That's on the high end. I'm paying $265 per appraisal. I'll take it. So you're going to need to pay that money up front. If you're doing a package of properties, typically it's going to be a large amount. So I got to pay $4,500 in a fee today to initiate these appraisals. You're going to need to send the leases of these properties. You're going to need to essentially, they're going to look at the rent amount to make sure it meets their DSCR requirement. You're going to need to submit a photo ID. Sounds obvious. They're going to also pull a credit report. Even if this is a, no personal guarantee, even if it's just like a commercial loan where it's attached to the property and not you personally, they're still going to run your credit. Make sure that you're not in any lawsuits or anything like that. And that's pretty much it. The hardest thing now is once you kind of pay for the appraisal, once you provide the leases, provide your ID, credit report, things like that. The hardest thing is going to be, because typically this is going to be a rented out property. So you're going to need to coordinate these appraisals. Sometimes that's a pain in the butt because the tenants are not very cooperative. Good luck with that. There's no, you just got to work it out. Go meet the appraiser out there. Go notify the tenants, bring the keys, make sure there's no dogs, and get the appraiser in there. It kind of sucks sometimes if somebody's not willing to cooperate with you, but this is just the challenges we all have to deal with as real estate investors. Get the appraisals done. Once the appraisals come back, again, based on that LTV, the lender is going to give you 75% of that. Hopefully that is more than you owe against the property, so you can do a cash out refinance. All the money that you pull out for the cash out is tax free. Could provide some good operating capital for you, and that's pretty much it. A BRRRR deal explained. So let us know in the comments or send us a direct message, whatever you got to do to get in touch with us if you're interested in getting this stuff rolling for yourself. We coach people all over the country, many very successful students in setting up a wholesale operation, a flipping operation, and or a buy and hold operation. And I'm going to suggest you do all of it. Because like I mentioned, even after you're building a buy and hold portfolio, we're always flipping properties because we got to keep the lights on. That's what it is. It's not one or the other. We are needing to do a little bit of everything, right? We highly suggest not taking on too big of rehabs. That's kind of an insider tip right there. What'll kill you in this business is the construction more than anything else. And we are here for you. So hit us up if you're interested in learning more, setting up a call with us and seeing if you qualify. And I will see you all on the next video.